If someone were to ask you what the best country in the world is, what would you answer? I was asked this question the other day, and of course there are many great places in the world, but one place stood out to me almost immediately, and I responded very quickly. And normally the question would be, the place that you would list one for yourself now, is it a tax haven? Is there a place, can you go there and pay little to no tax? For many, many people, the answer would be no. Maybe they're gonna say Spain, they're gonna say France, they're gonna say, I don't know, UK, they're gonna say, in this case, Japan. So I think there's an argument to be made that in many regards, Japan is the greatest place on earth. It is so wonderful. You have this phenomenally low crime rate, people are very polite, things work incredibly well, it's very livable, it's clean, it's got so much to do, the food is amazing. I'm a food guy, so I like that. Clearly you have Japanese Kobe beef, etc., or Wagyu beef. You've got all kinds of interesting fashion, you've got all kinds of interesting entertainment. It is a place that many people would say is maybe their favorite place in the world. Now, I don't know that anybody would want, or not anybody, I don't know that a lot of people would want to live there for their whole life, but certainly as a place to spend some serious time, it's massively appealing. Very, very cool place. If you have not been, I suggest you go. And little do people know that actually, for the right type of people, as I'm going to describe in this video, Japan can actually be a tax haven, believe it or not. Nobody talks about this. It is something kind of significant in that regard, but it is potentially a place that you could go and you could live there as a resident and you could pay no tax. Amazing, right? We're going to explain it today. Before we do, if you haven't already, please hit the subscribe button, hit the all notification bell. If you like the videos, please give them a thumbs up. If it is your first time here, welcome. I am Michael from Offshore Citizen. We specialize in creating international solutions for people to help relocate abroad, to optimize their taxes, to do business in multiple countries, to set up global corporate structures for digital nomads, for investors, for entrepreneurs, etc. We can help you with both what is the best solution for you, as well as helping you with actually implementing that solution. So if that's at all interesting to you, please reach out to us. You can book a call with me, calendly.com/Michael-Rosmer. There's a link in the description below. Or you can send a message through offshorecitizen.net. We'll be happy to help you. Okay, so how does this work? Well, I've done a video previously on the idea of non-dom regimes. You can go and check those out. And this is varies a little bit from country to country, but most common when you look at UK and Ireland, a little bit Malta as well. And this is a sort of similar type of regime. Okay, so to understand how this works, first of all, it is a status called a non-permanent resident status. And it applies to people who have been living in the country or resident in the country, domiciled, for 5 out of the last 10 years. Okay, so you can be there for a maximum of 5 years over a 10-year period in order to have this applied to you. You would be a non-permanent resident. So you'd be a tax resident, you would actually live there, it would be your home, etc. But you're a non-permanent resident. Once you cross over that threshold, you become into the actual just plain resident, permanent resident type category. Non-permanent resident is this. Now, if that is you, right, which if you just moved there, that would be you, how does this work? Well, normally what would happen in typical countries is they would tax you on your worldwide income. In fact, this is what Japan does for their residents. They tax worldwide income, right? And non-residents, they tax local income. That's kind of the distinction. If you're not resident there, you're only taxed on your local income. If you're a resident, then you're taxed on your worldwide income. For non-permanent residents, they say they will tax income which is local income, income arising from Japan or remitted to Japan. However, income which is arising from outside of Japan and not remitted to Japan is not taxable, no matter how much it is. It's an unlimited tax exemption if that is the structure of your income. So let's talk quickly about that. I've done some videos before talking about remittance basis of taxation. I've talked a little bit about source of income and how that works, etc. Well, here, if you were sitting in Japan working, earning the money, that would be considered earned in Japan. So that would be taxable. Okay. If, on the other hand, you owned a property in some other part of the world, let's say UAE, and it was paying you rent, that would not be earned in Japan. Now, if you brought it into your Japanese bank account or spent it in Japan, it would still be taxable in Japan. But if it was paid out to a foreign bank account, reinvested, grows, etc., it would typically not be taxable in Japan. Now, there are some nuances to how they figure out what is considered to be local in Japan and not. And in particular, things like shares can be one kind of issue that can get into a little bit of a tricky case. But for example, if you have a foreign company that you set up, has foreign operations, it's not operating in Japan, it's making a bunch of money, and it's paying you dividends, those dividends would typically be sourced outside of Japan. If you were getting some sort of a royalty payment, or you were earning some sort of interest income, so let's say that I decide to invest in the US, and I'm investing and earning interest, that interest would not be sourced in Japan. So long as I don't bring it into Japan, not taxable. I could literally be living off of various different types of investment income, or I could even be leaving Japan and working outside of Japan, making money while I'm out there, not making the money inside Japan, and then not bringing the money back into Japan. And I could be in a situation where I'm not taxable. All the while getting to enjoy the wonderful Wagyu beef, getting to enjoy the wonderful sushi, getting to enjoy all the great desserts, getting to enjoy the cool entertainment and the culture and the wonderful people and the beautiful nature and the history and all these great things that come with Japan without having to pay Japanese tax. So again, caveat, you only get it for 5 years, but I think it is super cool for people who can qualify for it. It's something that not many people know about. Not many people, honestly, are looking at Japan as a place to relocate to, and it is definitely true that integration in Japan is tough. There's kind of this concept that no matter how long you live there, you will never be Japanese. I've had clients who, in addition to Japanese clients, I've had clients who have married Japanese people, lived in Japan for 10, 15 years, become fluent in the language, and they're still not Japanese. So the expression typically is, when are you leaving? Because everybody tends to leave Japan after a while. And I think that makes it perfect for this type of residency. So tell me what you think. Put it in the comments below. Let me know if you have any questions. Let me know if there's other things you'd like to see on the videos. And if you would like a special customized solution for you, you'd like to understand what is the best in your individual situation. Like I said, every situation is different. You should definitely get some customized advice. So reach out to us, and I will see you on the next video.